So what is currently happening to Workhorse Group Stock is just insane. After getting shorted down by Wall Street, it performed an incredible run of more than 7,800% from lows at the beginning of 2019 up to its highs in February. And although it quickly recovered from those astonishing prices, we then saw some incredible gains again, pulling back more than 20%, however, since our last video. So what we are going to do today is give you an insight into what is actually happening to Workhorse Group Stock and break down exactly whether it is still a buy at the end. And as the analysis in the video is as always crucial to consider before buying the stock, make sure to stay tuned. Before we jump right in, however, just hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock. So we are basically looking at an amongst investors extremely popular delivery service, describing itself as the future of delivery. It uses vans that are not only 100% electric, but also super optimized, which allows maximum cargo space and easy access for the driver. Adding smart systems to always know where their vans are as well generally makes, as far as functionality goes, Workhorse's product line very attractive. But, and this is crucial for our prediction at the end of the video, after spikes in January, Workhorse Group Stock has been on quite the downward trajectory up to about the end of last month. And next to bearishness in the sector, Workhorse has lost out on a major postal contract to Oshkosh Defense in late February. This has been a key catalyst for the recent drop in the stock. What made the stock skyrocket again, however, is the massive hype amongst retail traders. As the stock gets mentioned heavily on forums like Wall Street Bets and in videos like this one, thousands of people caused short sellers to cover their positions and drive the price higher. And due to the continuously rising short interest, a new short squeeze actually becomes very likely again. But next to hopefully more hype, as a company that's still getting production figured out, orders are what matters right now. Accordingly, investors seem to be shying away from the stock on a lack of order flow of late. And in regard to the current valuation, Workhorse is still a tiny player amongst some pretty large giants in the EV space. As mentioned before, however, this also could provide the right kind of setup for long-term growth investors looking for value in this space right now. And after we pulled back a bit again, the price will be much cheaper with tons of people going back in at a less risky point, much like we've seen it happening before. As this is also very important for the prediction at the end, taking a look at forward revenue estimates of $282 million in revenue for 2022, the stock trades at about 5 to 6 times sales. And that's not incredibly expensive for a growth play in the EV sector with an e-commerce catalyst overlay. Additionally, Workhorse reported a cash position of $215 million during its recent earnings release. As said in one of our last videos about the stock, there's some indication this cash should provide the short-term growth capital sufficient for the company's needs in the short term, which also means that Workhorse doesn't look like it will need to raise capital in the near term. So the company focuses on providing the last mile of delivery in a way that's as environmentally friendly as possible. Given the surge in e-commerce and long-term growth prospects of this sector, investors are looking for ways to leverage the logistics and distribution surge that will follow. And doing so via an EV option seems like a good idea. If you want to buy for the short term, however, you need to consider the current volatility and massive jumps in price the stock is experiencing. This of course also plays a major role for long-term investors, but could be a huge growth factor as well. If the hype amongst retail traders continues and short interest rises further, a new short squeeze is not as unlikely as it might seem. Alright, with that being it for today's video, thank you very much for watching. If you like this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot and see you next time.